Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark runs down the markets from the past week. Publisher of the Gloom, Boom, and Doom report, Marc Faber, talks to us from Thailand. He discusses whether governments will switch to cryptocurrencies. Will crude be a big player? How equities are not as volatile as you might think, and how various asset classes all seem to be in bubbles. Plus, at the end of the show, we'll have company showcase updates from Cascadero's Bill McWilliam, American Manganese CEO Larry Reaugh, and Cannapay President Penny Green. We'll talk to Ross Clark right after this.
Glance Technologies owns and operates Cannapay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to the show, Ross.
Good to be with you, Jim.
Sears Canada wrapping up. The courts have given them permission for full liquidation. 12,000 people laid off, a piece of Canadian history about to disappear into the dark. What happened to them?
It's a darn shame. You know, you watch what's happened there. Well, they've had management issues for many years. They've been slow at making attempts to transition, especially as far as it was concerned into the e-commerce side of the business. You know, they had the chance to try that in the last 5-10 years. Didn't do it. Everything is changing with Amazon out there. The effect that it's having worldwide. The weak sisters, such as Sears, are the ones that end up giving up the business. So when you get to the point where you can't pay the bills, it's time to wind it down.
Ross, what happens to the shopping malls where Sears was one of their anchor stores?
Well, there's talk about either literally tearing down those parts of the big boxes themselves, or converting them into things other than retail. The owners of these complexes they're looking for anything that they can possibly do. It could be entertainment sources they could be looking to put in there. They are very, very open-minded in terms of what they're going to do, but we'll look at this 5 years from now, and these large malls will be considerably different than we envision or we see them today.
Some have suggested the Sears space could become senior citizens housing, and they would have convenient shops right there.
That's true. And I've also heard in some of these areas where there's lack of schools, you could convert some of it over to school, to classroom space. You've got to keep your mind open to any possibility. And the one you mentioned, maybe with the seniors, is a viable one. Seriously, when you think about the number of us who are going to be in need of that.
Taking a look at markets worldwide, everybody seems to be having a big party right now.
It is. We've got, here we are. Japan is just breaking out of a 5-year base. Other markets have been doing reasonably well, but, here's Japan, which has had its share of difficulties, and the Nikkei is sitting at a 5-year high, broken out through the 20,000 level in the last few weeks. In this week now, through 21,000. We take a look at the size of the base of the consolidation. It could easily measure up to 25,000. Some nice looking technicals there. It is important when you start to break out of a pattern that you pick up momentum. And as the last week and a half has progressed, the Nikkei has been doing that. And we look at it and say, as long as it can hold up through the end of this month so that the breakout has got that momentum, it's probably going to run. So for anybody who's watching that type of a market, you stay with the play as long as it's working, If you see any violation of, I would say, the September closing levels, you want to be looking for the exit door, but there's no reason to do that until then. And we take a look at U.S. markets, up sort of 0.5% across the board, maybe S&P this week up maybe 10 or 15 basis points, not quite as much as the transports or the Dow Industrials. But this is now, we are into the 11th consecutive month that the S&P has had higher lows. And look back historically, you got 20 times in the last 100 years plus where we've seen this, that we've had 8 months or more. And you would normally think of an action like that as putting us into an overbought position and that we'd be ready for a pretty big correction. But the reality is, when we look at the numbers, that most of the times, all you get is a 1-month hiccup here. You get 1 month with a lower low once you've put in 8 to as much as 12 of these months consecutively up. You get that 1 month hiccup with a lower low, and then you're back to new highs again. So if we get a correction at this point, don't look for one that's too deep. The worst ones, when we look back on them, we're only in the 7 to 17% level, so we're not talking about bear markets. We're just talking about what might be a big correction, but the norm would be a very, very small correction.
Ross, thanks you so much for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. If you'd like to contact Ross, you can at chartworks@gmail.com. Coming up, Marc Faber, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marc Faber, editor and publisher of the Gloom, Boom, and Doom report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome back to This Week in Money.
Well, thank you very much for having me on your program.
Under the Trump presidency, the Dow and the S&P 500 continue to hit new highs. We hear that Dow is either going to collapse or it's going to hit 40,000. What do you see ahead for the Dow and the S&P 500?
Well, I have always maintained that there is, of course, risk in the market. But if you print money, and if you especially print as much as the central banks have done in the last few years, then obviously something will go up. And it just happened that stocks have continued to go up because the perception is that bonds are relatively unattractive, which they are certainly in Europe. So what happens, the Fed, they essentially terminated QE3 almost 2 years ago, but the Bank of Japan and the ECB have continued to purchase assets. Now we have to understand what happens if the ECB and the Bank of Japan purchase assets. Basically, they buy bonds, and in the case of Japan, they also bought securities, in other words, equities. In the case of the ECB, who knows? Maybe they do it behind our back, but certainly they've done it in Switzerland with the Swiss National Bank. So basically, the ECB and the BOJ, they buy assets. So they go to, say, an insurance company and buy $1 billion worth of bonds. So the insurance company or the bank gets $1 billion. And the bonds, they go over to the BOJ or the ECB. The insurance company then can buy stuff with that $1 billion. Now, as you know, we have extremely low interest rates. We have negative interest rates in Japan. We have negative interest rates in Switzerland. So the institutions, they look around the world, where do we want to buy assets? And so they buy U.S. treasuries. And, of course, they buy U.S. equities. Certainly that was the case until recently because they were perceived to be strong due also to the dollar strengthening until December 2016. So the money then is printed in Europe and in Japan, but it flows into the U.S., and that has boosted U.S. equities. But of course, it has boosted U.S. equities in dollar terms less than European equities. So the Italian stock market in dollar terms is up 32%, and you have the DAX up 25%, French index up 22%, and in Asia we have markets that are up like Hong Kong, 24% in dollar terms, and also in India we're up over 24%, and so forth and so on. So there has been a move into equities. They've moved up strongly this year. I don't expect that this will continue forever. There'll be a big setback at some point. And right now the mood is very optimistic. Investors think stocks can only go up, when in fact they can also, for a change, go down substantially.
Is the U.S. now promoting a weak dollar policy, and what do you see ahead for the U.S. dollar?
Well, I don't think the U.S. has ever been interested in a strong U.S. dollar. That has never been a priority of the U.S., neither of the central bank nor of the U.S. Treasury. And under Trump, the dollar is rather likely to weaken further. However, having said that, we had a big decline in the U.S. dollar against the euro from the end of last year until just recently. And as a result of that, investors or speculators became convinced that the euro would continue to go up, and therefore their positions in Europe, which was negative at the turn of the year, has now turned very positive. In other words, as a contrarian, you should now sell the euro and go long dollars. And the same would apply. I think the Canadian dollar had a big move up against the US dollar. I think the dollar can now recuperate some of the losses it incurred recently against the Canadian dollar. So I would be long dollars for the next, say, 1 to 3 months. In the long run, obviously not. But for now, I think the dollar can strengthen further.
The world seems to be undergoing geopolitical upheaval. Why doesn't gold seem to care?
Well, actually, gold has performed better than what the mainstream media gives credit for. Gold is up relatively strongly since the end of 2015, and even since the beginning of this year, gold is up something like 8% in US dollar terms. And the GDX has actually outperformed the S&P both over the last 2 years and both this year. So I think that the media focuses on the FANG and FANG-related stocks In other words, Facebook, Amazon, Netflix, Apple, Google, and so forth, and semiconductor stocks. But in fact, gold has done actually, in many cases, as well as some of these stocks. Not all of them. There is another reason that gold has maybe lagged behind somewhat. I don't think it's the main reason, but I think speculators are moving into cryptocurrency. So the traditional small speculator that used to buy gold miners and stocks in general is now more into cryptocurrencies.
Are countries around the world likely to replace paper money and coins with government-created cryptocurrencies?
Yeah, I think that's the movement they're heading to, that there'll be more cryptocurrencies. As you know, in the U.S., several academics have expressed the view that you should no longer have paper money, that everything should be essentially electronic money, which would give the central bank even greater power than it has now, especially to go negative with interest rates should the necessity arise. So I'd say yes. I think in some years maybe you don't have paper money anymore. However, I also like to point out that in the case of Puerto Rico, where the whole power system broke down, the electricity and communication and so forth, it wouldn't be much use to you to have any electronic money. You would have to have in Puerto Rico at the moment essentially cash dollars or cash euros or gold in small coins, in small denominations.
Going forward, do you like gold or silver or both?
Yeah, I like all the precious metals. I think if I look around the world, and I've just written about it for my report, when you go back to the 2000 bubble, the 2000 bubble was really concentrated in technology, media, telecommunication. There was no bond market bubble. There was no housing bubble at the time. Gold in 99 was actually still below $300. And there was no bubble in collectibles and so forth and so on. Now, we have, and Asia at the time just came out of the Asian crisis, which occurred in 97, 98, so Asia was still very cheap. Now, we can argue that all asset prices are high, relative to where they were in 2000 or relative to where they were in 2009 at the bottom of the market, and that there will be no place to hide. Now, among all the inflated assets, you can argue, well, which one is the least inflated? So I can point out, for instance, to real estate in the countryside is not particularly expensive compared to equity prices. I can point out to real estate in the countryside in Europe, Italy, Portugal, Spain, even Germany, but in the countryside. The same I can do in Asia. And I can point to essentially precious metals, gold, silver, platinum, relative to equities, they're low. And what is at a very low level are essentially gold and silver mining companies. So this is an asset class which is relatively low, as well as energy shares. Energy and energy-related shares, fertilizers, the old economy stocks are not particularly expensive, especially not in Asia and in Europe. And these FANG-related stocks, the new economy stocks, the social media stocks, and so forth, they are very dear.
Is oil a political football, and are you bullish or bearish on oil?
Well, I don't think oil will move back up to its high in July 2008 when it touched $147 on the spot market. I don't think that will happen. Equally, I don't think that oil will go down to $10, $20. I think somewhere the equilibrium for oil prices is between, say, $40, $60, $65, maybe $70. And so I think that oil and energy-related stocks are relatively low.
We'll have more with Marc Faber next on This Week in Money.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Marc Faber, editor and publisher of the Gloom, Boom, and Doom report online at gloomboomdoom.com. Marc, are banks around the world starting to constrict credit?
Well, I think that depends on which country. I think sooner or later, most banks will have to reduce the amount of credit they're lending out. In particular, a case in point would be China. We had very strong credit growth in the last few years. I think they're becoming, say, concerned about the credit to GDP and the leverage condition that some companies have. So I think that in the case of China, maybe credit will not grow as much as before. In other cases, actually, credit growth has been very moderate. Like in Europe, it hasn't been very strong. Except, you have private credit, which is corporate credit, and you have household credit, and you have government credit. Government credit has been growing very rapidly everywhere. But government credit is then reflected in the government debt growing, as has happened under Mr. Obama. From the time he became president to the time he left, credit in the U.S., government credit, expanded from $10 trillion to $20 trillion. And that doesn't count the unfunded liabilities. And now under Trump, the way I see it, he is a borrower. He doesn't care. He just borrows money. And under him, in my view, the debt of the U.S. government will grow at, say, at least $1 trillion a year. So the debt will continue to increase. If private credit would really once contract, I think the Fed and other central banks would step in and essentially force credit into the system by buying assets, as I just described at the beginning.
What does credit restriction mean for real estate markets around the world?
Well, obviously, if credit is not available, then the real estate markets will slow down in terms of price appreciation. And if there are really credit restrictions on real estate or taxes on real estate, then you can have also a decline in real estate prices. But it's difficult to just say real estate. One would have to specify real estate where and in what location and what kind. Is it commercial or residential, and so forth and so on. So, I mean, you cannot generalize, but overall, all I can say is, because I've just written about this, is that the real estate in jurisdiction like Australia and Canada and New Zealand and high-end, Hong Kong, Singapore, is relatively high, or extremely high compared to the affordability. We always have to look who can actually afford to buy a house, who can afford to buy a condo. And as you know, in the case of Vancouver, and you're based there, most of the buyers came from Asia.
Experts around the world say Toronto has the worst real estate bubble in the world, Vancouver number 4. Would you agree with that?
Well, it's difficult to tell. A lot of people nowadays, they look at the North American continent. They may not wish to go and stay in the U.S., so they buy a property in either Vancouver and Toronto. So it all depends, for a Hong Kong Chinese, or even for someone coming from Shanghai, Toronto real estate prices are not terribly expensive. They're high for Canadians, but for an Asian, they're not terribly expensive. So it's difficult here to say with conviction, oh, it's a huge bubble. I think it is a bubble. And I wouldn't buy in Toronto at the moment, nor would I buy in Vancouver. But you could have asked me the same question 3 years ago, and I would have said the same. I wouldn't buy in Vancouver, I wouldn't buy in Toronto, and I would have been wrong.
What do you see ahead for the bond market and interest rates?
I beg your pardon?
What do you see ahead for the bond market and interest rates?
Well, I've been a bond investor since the early 1980s, when treasuries were yielding the 10 years and the 30 years over 15%. So I've been kind of bullish and positive about bonds for a long time. And I was just talking earlier about the bubble in 2000. In year 2000, the 10-year treasury yield went actually to 6.5%. So when you get 6.5% on a bond and stocks have a low yield, there's no great incentive to rush into equities. In fact, if you get a 6% yield on bonds, your money will double every 12 years, which is not so bad. And now, obviously, interest rates are very low. I think that, especially in Europe, bonds have practically no upside, but relatively significant downside risk, also in Japan. In the case of the U.S., the bond market is high, but, if you compare, say I'm a bond manager, I can buy a 10-year treasury in the U.S. at the yield of 2.33%. In France, I would get the yield of 0.73. In Germany, 0.44%. Italy, 2.14%. In other words, if I buy Italian bonds, they have a lower yield than U.S. Treasuries. If I buy Spanish bonds, I have a yield of 1.67%, much lower than U.S. Treasuries. So as a bond manager, I have to invest in bonds. So I would rather buy Treasuries than these European sovereign bonds. Or if I'm a bond manager in Japan, I have money, I can buy essentially 10-year JGBs at no yield, and in Switzerland at negative yield, but I can get on US dollars a yield of 2.33%. So you understand, the whole bond market has been grossly distorted by central banks, interventions, or I would call it manipulation. Nothing else than a manipulation. If you were a private bank or a private investor and you would manipulate interest rates the way central banks do it, you would be in jail for 20 years or more.
Is the goal of sustained easy credit to turn most people into debt slaves?
Well, I mean, the easy credit and artificially low interest rates have numerous unintended consequences. They have obviously meant that investors are willing to chase yield and incur more significant risks than until now. In other words, you take, I just mentioned U.S. Treasuries at 2.33%. In Europe, the junk bond market has the same yield. So you can buy European junk bonds, high yield bonds, or you can buy treasuries. Maybe the junk bond market in Europe is telling us that U.S. treasuries are also junk. That is a probable thing, but at least the junk bond market cannot print money, whereas the Fed can print money, and as such, they can pay the interest on the bonds. The whole market has been distorted, and in my view, that's what I said before, we have, in year 2000, we only had a TMT bubble. Now we have a stock market bubble. We have a bond market bubble. We have housing bubble. And some people would say we have also commodity bubbles. I don't think we have commodity bubbles because agricultural commodity prices have come down a lot. And as you know, gold and silver are also down. They've been in a bear market since 2011. In my view, they have bottomed out. But the bull market is not yet very convincing.
Trump is working on lowering taxes in the U.S. Governments in Canada are hell-bent on raising taxes. What damage could this do to the Canadian economy?
Well, I mean, I'm against any tax increase because it enlarges government more than would otherwise have been the case. But it is clear to me that essentially central banks with their policies have led to asset holders, and not just the middle class, but rich asset holders, not even the 1%, but the 0.1% or 0.01%. These people have become extremely rich, and the next station will be to argue, well, this wealth inequality is unfair, so we have to introduce a wealth tax. The rich have to pay more tax. That will be the outcome.
Do you think that's likely under President Trump with a cabinet full of billionaires?
Well, I think he will want to run again for president in 2020. We're 2017. So, in my view, between now and 2020, it is likely that some economic accident will happen. I mean, a recession or, a big setback as we already had in 2008. Who knows? But if there is a big economic setback, and the people that voted for him, essentially white, middle class workers, and the more traditional Americans, he will have to fulfill some of the promises he made to these people. And of course, if economic the condition of these people deteriorate, the Democrats will say, well, it's because of Trump's policies and this and that and so forth. So in order to get them to vote for him, he will have to make a gesture. And he vowed before he became president to clean up the swamp. The swamp has already drowned him. That is not going to be able to clean up much. He's promised to essentially go after Wall Street. He has done nothing. In fact, Wall Street is running the presidency through Goldman Sachs employees at the White House. And the foreign policies have been hijacked by the army. So Trump is just a clown. He doesn't have much say anymore. But he talks and, he tweets around and he does the public relations. But really, the country economically is run by ex-Goldman Sachs people and by the military in terms of foreign affairs. But I think towards the election he will have to do something. So he will move to the populist way and distribute the money to the ordinary people, maybe, even have helicopter money or whatnot. And he will then also attack the rich people. That, I think, is quite likely.
We'll have more with Dr. Marc Faber next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Taron property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Marc Faber. He's the editor and publisher of the Gloom, Boom, and Doom Report, which you can find online at gloomboomdoom.com. Mark, do bankers really run the world?
Well, I mean, already in the 19th century, U.S. presidents who were talking about the banking cartel and how much power they have and so forth. I'm not sure they run the world, but they have a lot of power, and for some reason, which are not entirely clear to me, people in democracies have given far too much power to central bankers. I mean, when you have the ability to print money, to expand your balance sheet and contract your balance sheet, and when you have the power to manipulate currencies and so forth, and to purchase government debt, in other words, to monetize government debt, you are very powerful. And that I will never quite understand why central bankers were assigned this kind of power. But as you know, some people say the elite likes control. They didn't like that ordinary people elect Trump because he's not from the elite. And they didn't like people like Nigel Farage in Britain and so forth. And so there is a strong opposition to anyone who is actually really democratically elected. They don't want democracy. They want control. Or they want democracies that they control. In other words, you're given a few choices, and these people are okay to be elected, but if a third one comes along, they'll shoot him down.
How tough is it to get money out of China now?
I don't think it's any problem at all. But it's maybe a problem if you're a large corporation and you want to buy $1 billion worth of, I don't know, a company in the U.S. and so forth. There may be restrictions, so they may not give the approval. But for individuals to move money out of China, I don't think it's a problem.
Is China still printing a lot of money?
Well, credit growth has been very strong, but over the last 3 months, it slowed down considerably. So the answer is they printed a lot of money, and credit growth was very strong. Debt to GDP over the last, say, 8 years has gone from something like 150% of GDP to now 270% of GDP. There was a huge increase in debt. And exactly how this will end, we don't know. I can't imagine that it will end very well. But Chinese stocks, I wrote about that a year ago, were very cheap compared to other Asian stock markets. And I think that gradually investors will wake up to the fact that they simply need to have some money in Chinese assets, either stocks or real estate, because the country is economically so important. And you have companies like Tencent or Alibaba that are as advanced as U.S. corporations in terms of technology. So I think a lot of people will say, well, we don't like China maybe because the debt to GDP ratio is too high, and maybe there'll be a crash or a recession. But equally they will say to themselves, I think in the long run, for the next 20, 30 years, we need to have some exposure to China. So let's maybe put 5 or 10% of our money into China, and if there is an accident, we'll boost that percentage to maybe 30, 40% of our assets. So this is what I think will happen.
Is China transitioning into a democracy?
I don't think so, because they're not so stupid. They can see the complete failure of democracies in the Western world, and they will not go the democratic way. There is some kind of a voting process in China, but only among the Communist Party. In other words, the most capable people, they get to the top. But there isn't an alternative to the Communist Party for the time being. But their system functions reasonably well, so there's no urgency to have a democracy. Whereas the European countries and the US are completely dysfunctional. And these are democracies, but they don't function properly.
World markets. Which markets are you bullish on and which markets are you bearish on?
Well, I think I explained to you that I think there is some certainly relative value in precious metals, and I believe there is also some absolute value in precious metals and precious metal shares. I have exposure to Asian markets. I think that the Singapore market has corrected and is now running up again. It's not terribly expensive, everything considered. I also have exposure to China, some exposure to India, but I think the Indian market will go down now for the next 6 months or so, and I have exposure in Vietnam and in Thailand. And so, and for the first time in years, I have positions in European stocks, European stocks I started to invest actually 2 or 3 years ago.
Are junior markets or junior mining markets turning bullish right now?
Well, there are days when they act horribly and the days when they act well. And some stocks, they perform well, like Kirkland, and others don't. I mean, it's a very mixed bag. But, you know, if you are, say, a value investor, and you say to yourself, I want to buy something that is kind of neglected. Nobody's particularly interested in mining stocks at the present time. So I think there's some value there.
Is the push for electric vehicles and their large batteries creating an opportunity in the energy metals?
Well, this is, you have like for bitcoins. You have some people that think it's the greatest invention since the invention of the printing press, and others, they think it's not, or they may think it's a fraud. In the case of electric cars, you have to be believers. Say my friend Robert Friedland, he's a believer. He thinks that in 10 years' time you won't find any gasoline-powered cars on the roads anymore, that everything will be electric. I doubt. I think the changeover will be much slower. But secondly, the speculators have bid up the price of lithium. But actually, what is really used in electric batteries at the present time is cobalt. And also copper. The electric batteries are a big user of copper. So I think, yeah, the outlook for copper is probably okay, but it has already had a good move, and I wouldn't necessarily chase it.
Do you drive an electric vehicle?
No, because this is the point about electric cars. In less developed countries, like India and Thailand and so forth, where you have still a large rural population, how's the farmer going to drive an electric tractor and so forth? So most of the traffic and the vehicles will be for a long time still gasoline powered or diesel powered. And by the way, I think the battery technology is in its early days. And I'm not at all sure that Tesla's battery will be the winner. I think there can be other batteries that will perform better and be more efficient and lighter than the Tesla batteries.
Is World War III likely, and where would it break out?
Well, it's difficult to define World War III, because maybe the next war is a different war than, say, the trench war during the First World War, and the tank war in the Second World War, and so forth. Maybe it's a war where some hacker will steal all your information, like how happened at Equities. And you can also have regional conflict. So, for instance, the U.S. is at war in Afghanistan. They are at war in Iraq and in Syria. They're everywhere, involved everywhere. And if they could, but they cannot, but if they could, they would attack Kim Jong-un. But they know they cannot. So whether it will come to a big conflict or not is debatable. But I think there's a chance that it will happen one day. It's not going to be pleasant for asset holders, obviously not. But some assets will be more desirable. As I mentioned in the case of Puerto Rico, in these kind of situations, you rather want to own physical banknotes or physical gold than anything that is paper and anything that is only electronic.
What are your thoughts on the marijuana industry?
Which industry?
Marijuana.
Marijuana. Well, I mean, it's about time that they legalized soft drugs. I mean, grass or hemp is causing much less damage than opioids. As you know, in Vancouver, the leading cause of death nowadays are opioid related deaths, where they have overdoses. And so I'm in favor of anything that legalizes drugs, because if you don't have legalized drugs, then people take pills which are much more harmful to your health than, say, healthy marijuana or hashish or grass or whatever it is. It doesn't cause any damage to your health, unless someone says, well, you know, it causes damage if you take too much. Well, look at Americans, how they look like, just because they eat too much snacks. So everything that you consume excessively causes damage. I also drink alcohol, but not necessarily to the point that I'm drunk every night or completely drunk. A little bit is okay, I guess.
What percentage of people are capable of thinking for themselves?
Yeah, I wished I knew, in my opinion. The world actually, I don't know whether it was by purpose or by accident. I think the kind of social media that comes along through Facebook is actually dumbing down the world. They become completely uninformed, and they also are not interested in their surroundings. You understand? I see so many young people, they are in restaurants with their parents or with their friends. They all arrive as soon as already when they walk in, they're already watching their mobile phones. Then they sit down and they're all on their mobile phones. They don't talk to each other. And at the end of the dinner, they all go home. What for? And I see lots of people, you know, when you are in the countryside or you see a beautiful monument or whatever it is, the people don't look at these things anymore. They are on their mobile phone. They don't enjoy the food they eat. They don't enjoy the drinks they drink. They don't enjoy nature. They don't enjoy watching people move around and the environment. They just watch their telephones. I tell you, I mean, of course, I'm aware that every generation will say, today's generation is not as good as we were. But in my case, that's not really the way it is. I think my generation, we had some drawbacks, but we had much better food than what is served today. And we had much more freedom in terms of less regulation, less laws. And we had some disadvantages, you know. Traveling was more expensive, and to fly when I was young, say from Europe to Asia, you had to land somewhere in between or have two landings and so forth, so it was more inconvenient. But on the other hand, you had the advantage that when you arrived, you were not run over by 30 million Chinese. And now they are actually, every year, there are 130 million Chinese traveling outside the country. So wherever you go, you know, you have a large number of people, which changes the whole hospitality industry. I don't enjoy going to an airport anymore. I think it's a horrible experience, especially with the custom officials and the security people and so forth.
Should smart people be made to subsidize stupid people?
You mean rich people should subsidize less fortunate people?
If you want to put it that way, sure.
Well, this is a philosophical question. And as you know, we have had the movement of socialists in the world and the communist movement, and it doesn't work, period. And I'm not in favor of distributing wealth. Now, because I've seen it, and I see it even nowadays, and not just once, but repeatedly, it leads to incredible abuse. The U.S. spends more on health care than any other country in the world as a percent of GDP. They spend something like 20% of GDP on health care. But Americans are not healthier than others. You understand? So there is a huge abuse. It's not just an abuse that is carried out by the patients, that the people that are sick. The abuse is also perpetuated by the pharmaceutical industry, by doctors, by hospitals, by agents that send the patients from the doctor to hospitals all over the country, and so forth and so on. So I'm against any kind of this redistribution of wealth. Now, someone may come to me and says, look, Mark, you can't be that way. There are some people, they are, say, disabled. They have to be taken care of. Yeah, I can say we have so many foundations in the world and so many help organizations. It would be better that these organizations take care of people and the families take care of their members than that some government official takes care of people. Because by taking care of people, the people become more and more dependent on the government. And by giving people something, the government can then influence their vote. And completely against that. Nowadays, in modern democracies in Europe, you have like vote buy. And the government, you know, ahead of the Scottish independent vote, the government that was not in favor of independence, they told people, oh, your benefits will be cut and Scotland will go bankrupt and this and that. Same occurred ahead of Brexit. They told the people, you know, your benefits will be cut and so forth and so on. And it could be that the benefits are reduced. Maybe they will be also increased. Who knows? But basically it's wrong that people take decisions only because of benefits they receive from the government.
Mark, how can people find out more about the Gloom, Boom, and Doom report?
Well, they can go to the website gloomboomdoom.com, or they can send me an email.
Mark, thank you so much for being on This Week in Money.
Well, thank you very much.
We've been speaking with Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, which you can find online at Gloom, Boom, Doom. He was speaking to us from Thailand. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark and Marc Faber, and thank you for listening. Stand by for company showcase updates from Cascadero's Bill McWilliam, American Manganese CEO Larry Reaugh, and GlancePay President Penny Green. I'm Jim Goddard. If you have any questions for the show, you can email us at info@howstreet.com. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm your host, Jim Goddard. We're speaking with Cascadero Chairman Bill McWilliam. Welcome back to the show, Bill.
Great, Jim. Thank you very much.
What kind of news do you have for us this time around?
Well, we published a news release yesterday, which is an exploration update that brought everybody up to at least the understanding of where we're at and how we're moving these properties that we got forward. And I can go through that in a little more detail on this phone call. And the news release started with Taron, which is one of our core properties, and we've done a lot of drilling on it, and there is a deposit there. We've now are into our third phase of metallurgy at UBC, and this is a very unique, special property that it has a metallurgical, complex metallurgy. It's an epithermal polymetallic system, and it's got rare metals in it. That's an unusual combination of elements. The metallurgy has been ongoing since 2015, and we've done several. The word I used yesterday in the news release was experiment, and that's really what metallurgy is when you get a complex problem. There's no standard formula for this, so it's a matter of having a brainiac group of people, which we have, great metallurgical people and chemists, and they figure out the combination of the solutes, the leach issues, the acids and other reagents that are necessary to extract the cesium from the ore, from the mineralization. We've been disappointed, as you would expect. Most experiments fail. This one is not failing. We're moving solidly forward now. The objective is to reduce the reagent cost of leaching the cesium out of the mineralization to be competitive with world standards. We're very close to being able to say that now, even though I just said it. The new results we had are not fully vetted at this particular time. We don't fully understand exactly why there was such a change, but these guys are working on it right now, and it looks like we're going to get to our objective, which will enable us to spend more money on the property, which we're planning on doing in February and March, another 3,000 meters of drilling. And we have 60, we've got 35 drill holes in it that we just finished, 7 previous to that. And if you want an analogy, the high-grade drill holes we've identified, and it's like having islands in a shallow sea, okay? The islands stick out of the water. And we're going to drill 40 drill holes, 4 around each of the 10 holes we've got identified, to upgrade the tonnage of the resource and upgrade the cesium content. That'll start in February or March sometime, and we just met with the drill contractor yesterday, and we got the pricing. We know what we have to do. It's not a lot of money. It's less than $250,000 to do the next phase. And the metallurgy at UBC is ongoing, and it looks like we're going to make a real big step forward here real quick. And I'm going to be very happy when that happens, because this is a classic example of if you don't find mines, you have to make them sometimes. And this is one that always, from the time we found it in 2004, we realized that if the metallurgy did not work, then it was never going to be a mine. So we've been on that path for a long time, and now we're close to the finish line, and I think it's going to be a very successful ending. So we're quite happy about that. There's a lot of data here. I'm not able to publish the data right now because we haven't peer-reviewed it, or it's not corroborated. And we're just going to wait until all of that happens and publish the information. It'll take another probably 2 months now. This is a slow process, but it's meticulous, and it has to be deliberate, and it has to be very structured with respect to the objective. So we're on that path. It's going to take a little longer than we ever thought, but I think it's going to work out for everybody, especially the company and the shareholders. They're going to be quite happy. There's lots of interest in this property from the people that are in the cesium business, cesium compound on the planet. Both of the properties that produce cesium now are either in mitigation to fix a problem, or they're out of ore. So this has been the only new discovery of a cesium mineral over the last 25 years, and we own that property, and we're going to develop it.
Bill, where's all this activity taking place?
At UBC, University of British Columbia. It's the chair of metallurgy there. His name is David Dreisinger. He's well known throughout the world. He's got more frequent flying points than any man I've ever known. He's employed by all of the major companies, and he's a brilliant metallurgist. And the team of people we have are older. I should say, I don't want Rod McElroy to hear me say older, but he was a former AMY.V consultant. Very smart guy, very shrewd, and he's just an incredibly good person to work with. And we have a professor, Colin Oleman, who's a professor emeritus at UBC. He taught chemistry at UBC for a long time, and he's a key part of our team. He does all of the vetting of the mass balance, so to speak, stuff. I don't really understand how he does it, but he gets it all right all the time, and he's the main critic of the process that UBC's working on, and the team works together beautifully.
Where's the drilling taking place?
The drilling is in Argentina. The property is at an elevation of 4,200 meters, so wintertime is not a nice place to be there, but we're coming into the best part of exploration time in Argentina right now. It's spring there, and it's a beautiful part of the world to be in. It's spring, very nice weather. And we will drill those holes in February, March next year, and we won't have any we shouldn't have any weather complications like we had when we got the original program started in February of this year.
Bill, where is Cascadero traded, and how can people find out more information about the company?
Cascadero is listed on the TSX Venture Exchange under the ticker symbol of CCD, Charlie Delta, if you want to go international language. It trades, we've got 200 million shares outstanding. Stock trades at 9 cents today, trading at 9 cents today, an $18 million market cap. We believe we have a portfolio of properties that represent much higher value than we're getting, but we don't really have a lot of people that understand what we're doing or understand the company. But I was looking through the archives the other day, which I do frequently to check all the assays and the properties we dropped and abandoned. The business plan I wrote in 2003 was basically just that we had to get as much property as possible because it was very cheap to do that in Argentina. We ended up with 225,000 hectares, which is a big piece of ground, 110 properties. And the portfolio we have right now is basically a rendering of that position. We've held all of those companies. We've looked at all of those properties. We're now down to 26 properties, and we've got just under 50,000 hectares. So this is the core of our business right now. We're in 4 core areas. The properties are all, they've gone through vetting by many geologists, and now we're at the point where we can raise the money and start drilling. You do not create value in any of these companies any other way than by drilling. And that's the expensive part. We're moving into that period right now. We're going to be drilling hopefully 3 or 4 properties a year and push the valuation of the company up significantly.
Bill, how can people find out more information about Cascadero?
Okay, so what we're doing right now, and this has been an area that I've never really favored in terms of spending money on promotion and investor relations. We've done very little in that area, as I believe that we should be spending the money on the properties and developing a property that has created value that some larger company wants to purchase from us, and that is the exit path for this company that I've always viewed as being the correct exit path. I have, however, just been convinced that by our board and some other top shareholders that I need to get more information out to the public. We're now restructuring our website right now. We're putting all of our internal reports. None of them have confidential information in them, but they're all our internal reports that will be available to the public on our website. We've also got a group of people, I think we have 5 people right now, that are going to be working on the investor relations side of the business. I've agreed to provide the money, which is going to be around $85,000 from what I can see, to do this for 1 year and increase the exposure of what we've got to a much wider range of people. And I think that's going to really help things. The stock's pretty liquid, by the way, given current standards. But it goes up to 12 and back to 9, and that's kind of frustrating. It's kind of range bound, and I think the IR program will develop some buying and get the stock out of that range and, give more value for what we got. That's our current plan. I'm committed to do that now, and I think it's the right thing to do.
Bill, what's your website?
The website is Cascadero.com.
Thanks a lot for chatting with us, Bill.
Yep. Thank you, Jim, and I appreciate these opportunities, and they're very good for us. Thank you very much.
We've been speaking with Bill McWilliam, chairman of Cascadero. We were speaking on October 12th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. We're speaking with Larry Reaugh. He's the president and CEO of American Manganese. Welcome back to the show, Larry.
Glad to be back here, Jim.
What kind of good news do you have for your shareholders today?
Well, we put out a press release talking about one of our advisory board members, Jalis Uretti, and that he is actually heading up a group coordinated by the governor of New York to build a gigafactory in that district. And I can't say enough about that, a lot of questions come is this a real deal and all this stuff. Well, if you can't believe a battery manufacturer, award-winning battery manufacturer who's heading up a gigafactory in New York and is sitting on our advisory board, if you can't believe his belief, and you want to go to the bull boards and believe that crap, then you shouldn't own the stock. So Yeah, that was a fantastic cue for Shalish, and it certainly reflects on the board of and the advisory board of American Manganese. So I know that there's not a lot of time, and I just wanted to talk about that briefly, and then I wanted to talk about a bit, because I've been asked a question, how was the benchmark conference? Well, the benchmark conference went well. They've had some great speakers there. I had an opportunity to talk about the company, and along with 9 other companies, and so we... And, you know, I had people coming up after the conference and talking to me about it, and I found that it was predominantly Australian companies that were represented there. You can never tell what the outcome of these conferences are. There was a couple hundred people there, and you can't tell the outcome immediately. But I think in the long term, we've made ourselves better known amongst the community. And so I thought the conference went very well. Now, the other thing that I'm going to talk about is, you know, people are saying, well, now that Shalish is heading up this initiative in New York on the Gigafactory, is he going to stay on the board? Because this is what's going on the bull boards. He probably won't stay, right? Well, I think nothing could be further from the truth. And, you know, Shalish has been, you know, producing his own batteries for some time. So I have seen no reason that Shalish would want to leave the board. And I think that we may actually make a good fit. They have a gigafactory. Who knows? They may need recycling at some time. So, and he certainly will be in the decision-making box in that regard. So that should be viewed as a very big plus, even though you know, again, the bull boards are making comments that oh, well, does that mean he's going to leave? Why would he stay? You know, blah 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 blah. It's not that he was an unknown entity before. He's an award-winning scientist, and certainly we're happy to be able to attract that caliber of a person. Now, just to go a little further along, some other news that hasn't made the headlines out there is that the DRC is starting to raise their head. And, for example, officials from the government stopped cobalt miners' Cesium from exporting unfinished mineral products. So what they want is they want to initiate a program like some of the other countries are doing, especially in Latin America, whereby you export only value-enhanced properties. Good thing for the government, certainly is 10 steps back for the production of cobalt. You know, smelters would be involved and refiners would be involved in that case. And I think this hasn't made the general news yet, but they are talking about only high-value products being shipped out of the DRC. So what that says is that there could be a disruption in supply. And you know, this should certainly have a effect on the price of cobalt, which could, you know, go through the roof based on if more of this starts to happen. So I just wanted to make our shareholders aware that things are happening that have been predicted on this show some time ago. Not necessarily the exact steps, but there is definitely going to be a spike in the price of cobalt.
Larry, right now there's talk of developing a magnesium battery to replace the current lithium-ion batteries. Would that change your business model at all?
Not for about 15 or 20 years. You know, these, if you want to start looking at battery types and changes in the chemistries of the cathode material and everything like that, there's almost one a day coming out. And, you know, magnesium is just one of many. And, you know, we can't we can't really evaluate everything that they're doing, except we know that it takes 5 to 10 or 12 years to commercialize something like that. And so we're not in any jeopardy of changing our business model at this time. And but just going back to what I was talking about, the trading in the stock is something I was going to want to mention. And the trading has been that we've had more on the offers in the last few days, and then we've also had a lot of bashing going on the bull boards. If you want my take on it, the bashing and the offers are being made by predators, and they want to cover their short positions before the announcement of the patent application in November. So, that's a game that's being played. I don't have a lot of control over it, but it may open up some buying opportunities for shareholders that have been sitting on the sidelines. And because, once the patent is granted, then they can't really talk about how valid our process is. So not granted, but applied for. We wish our investors a great weekend, and everything that's been happening lately is very positive. We're on track with the patent application, and we're in a great position as a company with the intellectual property here.
Larry, for new listeners, can you maybe describe what American Manganese does?
American Manganese is a mining company that has projects in manganese and developed a intellectual property which is patented in the U.S., China, and South Africa. For taking very low grades and economically producing electrolytic manganese dioxide and metal. And we also have projects in cobalt, gold, and some rare earths in British Columbia. But we're focusing on taking the technology that we developed in the manganese area and with some changes, adapting that to recycling the cathode materials in lithium-ion batteries. And in that regard, we've been able to get 100% of the cathode materials, such as cobalt, nickel, manganese, aluminum, lithium. Lithium is at 92%. We expect we can move that up to 100%. So we have an answer for the recycling of batteries, which would make it a complete closed-loop environmental system from the cradle to grave. And we trade on the TSX Venture Exchange under the symbol AMY. We trade on the U.S. under the symbol AMY.ZF. We trade under the symbol 2AM in Frankfurt. We have a website where you can find everything about us. That's www.americanmanganeseinc.com. Or you can reach me on the email at LREAUGH@AMYMN.com, or give me a call at 778-574-4444.
Larry, thanks for the update.
You're welcome.
I've been speaking with Larry Reaugh. He's the president and CEO of American Manganese. We were speaking on October 13th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. We're speaking with Penny Green. She's the co-founder and president of Glance Technologies Incorporated. Welcome back to the show, Penny.
Thanks, Jim. I'm happy to be here.
Your brand new news release has some information about us, about a financial dealing. Can you tell us about it?
Certainly. There's a subsidiary, a partially owned subsidiary of Glance Technologies called Cannapay Financial. And we originally did a deal with them about 4 months ago where we licensed Cannapay Financial the technology that was used to create the GlancePay mobile payment app for $1 million, and we were paid back and we acquired 40% of the company. So we wanted to be able to get into the cannabis space without being directly involved, and so this allows us to do that. Now, an update on what's happening with Cannapay Financial is that it has recently acquired another product line. This one is including soaps, massage oils, bubble bath, bath bombs, body sprays, moisturizers, and bath salts. And these are created with essential oils and herbs, salts, hemp, and other ingredients, and are used for skin rejuvenation, relaxation, pain relief, stress reduction, skin repair, and deep cleansing.
What is Glance's licensing strategy?
Our licensing strategy has been to take our very successful anti-fraud technology and mobile payment system and license it to companies that are in other verticals to allow GlancePay to access those other verticals in basically in a sort of a joint venture with another company that can use their expertise in marketing to that audience. So with Cannapay Financial, Cannapay is developing a lifestyle app for the cannabis industry. So that company is working to develop a meaningful, insights-driven brand and the supporting content with the underlying goal of educating cannabis consumers about how to most effectively utilize the products to achieve their health and wellness goals. And just as the practice of Ayurveda is based on the science of life, Cannapay is building a brand centered on the science of people.
What licenses have been handed out so far?
So far, Glance Technologies has announced 2 major technology licenses for $2 million in revenue. One was to Cannapay Financial, and the other one was to ActivePay. And I can tell you, Jim, that we're working on some other ones.
What's happening with the 2 you have so far?
Well, Cannapay is currently in development and is hoping to launch the first version of the app within a few months. ActivePay distribution, also as it was recently signed, is in development. We're currently doing the user design, the user experience, and we hope to have that app launched within a few months as well.
Can you give us some background about how Glance technology works and who's using it?
Certainly. Right now, GlancePay, the first vertical that the Glance Technologies technology has been used in, which is a restaurant vertical, is live across 5 provinces in Canada, and we have signed our first restaurant in the U.S., so we're now planning our U.S. expansion. And what our app allows people to do is when you're in a restaurant, you can take a picture of the bill and pay and go. And so you don't have to wait around for the machine to come by. You don't have to wait for the waitress to come by and take your money and check and take your card. It's just a very simple process. It takes a few seconds, and then you're good to go.
Does that help somebody keep track of their accounts, especially if they have an expense account?
Yes. When you use the GlancePay app in a restaurant, you have automated expense tracking. You automatically receive an email just like you would for Uber, and that email can then be forwarded to your accountant or whoever you like. There's also a record of that receipt permanently in the app, so you can go back and check anytime you like. And you also collect rewards. So every time you use the app, you will collect customized rewards from each restaurant, and some of those rewards can be as high as 15%.
I know some banks let you take pictures of a check and deposit it. How popular is it using your phone to pay for things?
It's very popular, and it's becoming more and more popular. You can look at somewhere like China, where apps like Alipay now do, combined with a few other mobile payment apps, now do about $5.5 trillion in transactions a year in China alone, compared to about $5 billion about 5 years ago. So if you look at where we're at in North America, I mean, just from your own experience, you can probably think that you're just starting to see people use their phone for payments. It's anticipated that, within a few years, this is going to be the norm, and we'll be using our phone for everything.
Could you see people using their phone more often than, say, a debit card or credit card?
Absolutely, and that's definitely where it's going. I wouldn't be surprised if in 2 or 3 years, it's really the principal way that people pay for everything in Canada and the U.S.
Where can people find out more about Glance Technologies?
Go to our website, GlancePay.com, which is our product website, or our corporate website, Glance.Tech.
Penny, anything else you want to tell us today?
I'll tell you what our symbol is in case you want to buy our stock. We trade on the Canadian Securities Exchange under the symbol GET. We also trade on the OTC QB under the symbol GLNNF.
Penny, thanks a lot for chatting with us.
It's been a pleasure, Jim.
We've been talking with Penny Green. She's the president and co-founder of Glance Technologies, Inc. Her website, glancepay.com. We're speaking on October 12th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.